Hi, I'm Peter Rose, founder of Longwood Currency Trading. 2 ways to manage FOREX drawdowns. It's a critical topic, and if you don't really understand what that is, how to manage those drawdowns, because drawdowns are part of the game. If you don't understand how to manage them, then the drawdowns become the loss of your account. So I've got 2 simple things that I want to chat with you about, and so that's what we're going to do today on this beautiful mid-November 2023 day that's going to be cold enough that's going to drive me in here to the inside pretty soon. So the 2 ways to manage FOREX drawdowns very simply are: number 1, you got to embrace the loss, and number 2, you got to shut it down immediately. So let's go over those in a little bit more detail. Short video today, but let's just take it and stick with it, because I think this is going to help you out a lot. So you may remember in a previous video, I don't know, 4 or 5 ago, I talked about the catastrophe with the wood pile. I was getting wood in for the wood stove and the whole pile collapsed. Well, we had another collapse today, and there it is. Didn't hit me. I jumped out of the way because I was prepared for it. That's a drawdown of a different sort, but it's still a drawdown. How do you manage that? It happened once. I knew then to step back away from the pile because it wasn't stacked very well. Guy who stacked it didn't stack it very well, so the potential was for it to fall down. So it fell down. This time it was worse. That's all part of the game. If I didn't want to mitigate that, then I shouldn't have a wood stove. I shouldn't have wood delivered. I shouldn't be the one out gathering the wood to go take it into the wood stove. And yet there it is. The wood is something that I want because I like the wood stove, and so I have to manage that process. I have to manage getting the wood. I have to manage the process of getting the wood, and then what do you do with the wood after you get it? That's all a process, and that's how I teach everything. I've taught karate for 55 years. I've taught software engineering as a software engineer for 33 years. I've taught folks how to program and organize their thoughts in a business-oriented process. Any fool can teach you how to program with a language, but what are you going to do with the language? You have to be able to apply it into some practical application. How do you solve a problem? Same thing with trading. Anybody can show you what a pip is and all that other stuff, but you need to learn a process. So anything you're going to be involved in has its problems, its potential issues, and it needs to have a process to be dealt with. If you're going to trade, you're going to have drawdowns, and so therefore you just have to be ready for them, or you'll get caught underneath one of those at some period, right? Okay. And another process that needs to be managed in order to get things started for the video. Okay, 2 ways. This is a process for this. So we'll talk about the process of managing FOREX drawdowns. 2 simple things that I use. Number 1, embrace the loss. Number 2 is shut it down immediately. Let's go over those. Embrace the loss. Look, losses are part of the game. If you don't understand that, you shouldn't be trading currencies. You shouldn't be trading anything. Probably shouldn't be getting up out of bed in the morning. A loss is a teaching event for you. That's a good thing. When you win, you don't learn anything. You just learn that whatever it is that you did was okay. But that doesn't help you if you can't identify the things that are not okay. So loss is good because it teaches you what not to do. Embracing loss simply means that you accept that as part of the process, and that with the loss will come gain. And of course the mantra that we all sing is that when you win more than you lose. When you lose, you win more times than you lose. What does that remind you of? To a lot of people, it's just, cut your losses short and let your winners run, which is probably the stupidest advice that I can possibly imagine giving somebody who's having trouble with their trading. What good does that do? How does that help you embrace the loss? Well, it doesn't. What does help you is the win-to-loss ratio, because within that wins number of times that you win minus the number of times that you lose. But there's 7 components to the real equation that go into the win-to-loss ratio equation, because it's not just a ratio, it's an equation. And so I teach the equation to folks that want to train with me, and it takes a while before we get to it, because there's a lot of preliminary discussion that needs to go around the importance of why this equation guides you in overcoming problems of managing drawdowns. That's one thing. Number 2, it shows you what you need to work on in order to increase the gains that you have. The metrics that you collect on your trading. Now, okay, so if you're not very good at trading, you're not winning very much when you win, you're not winning very many times, and you're losing more times than you win, and you're losing more than when you lose than you win. I mean, you've got 4 things going against you right there. But that's okay, because when I work with somebody, I teach a process that all becomes part of the learning process. Let's lose. Let's embrace that. Let's figure out why we're losing. And after a certain period of time, you begin to see patterns in what you do in relationship to what the market is doing. And you have to give up what you do and look at what the market is doing. And once you're able to do that, then you can start to work on understanding the metrics of trading: win-to-loss ratio, average win value, per trade expectation value. There's 4 major metrics that I teach. But the key to that is the win-to-loss. You have to learn how to manage your money so that everything falls into play. That you win more times than you lose, and when you win more than when you lose. So that even if you're a jump ball trader at 50-50, you're still going to make money. That's why a lot of folks trading stocks, commodities, and things like that, they may have a different kind of an edge than what we're able to get in currency trading. And so as a 52 or 53, 47 trader, that 3% edge or 2% edge, that makes you a lot of money. In speculating, that's really what you're doing. You know, the pit traders are speculating. They don't need to win a whole number of times. They just need to pick away at it and make it just a little tiny bit each time they win, but they need to do it many times. You only can embrace your loss as a learning experience if you've been shown how to learn from the loss. You can't just take a hit and go, oh, I got into that trade too soon, or I didn't get out of it soon enough, or it was Tuesday and I shouldn't trade on Tuesday because it was NFP, or what. I mean, those really aren't the reasons for your loss. Those are the excuses for your loss. And there's a difference between a reason and an excuse. So not only in learning what the metrics are that you need to develop, but also you need to learn the difference between a reason and an excuse. And when you can do that, you can embrace loss, and it doesn't affect you. And the second way to manage FOREX drawdowns, or the second thing that I use, is shut it down immediately. What that means is that, and that isn't on a per transaction basis, we're talking about the daily basis if you're going to be making more trades in a day, or maybe you're a longer term trader and so you trade one time a week, so maybe your drawdown is over a month period of time. I don't know why anybody would trade long term in the Forex market because of the characteristics of the Forex market, but if that's what you've been thinking you want to do, then go ahead. But as a day trader, we work on a daily basis. So if on a daily basis you lose X number of pips, you just shut it down and try again. You don't do it on a dollar value. You're not supposed to be trading for dollars anyway. You're supposed to be trading for pips, because pips is how you learn to perfect your craft. The pips is what the trading metrics are based on, not the dollars. If you're using dollar metrics, then you're not going to learn how to do this the right way, the sustainable way. You may make some lucky hits and come out ahead, but you're not really understanding trading. So during the course of a day, if you've lost, let's say your normal loss is 10 pips. Whether you're trading one full lot at $10 a pip, or you're trading 10 full lots at $100 a pip, it's 10 pips. It isn't $10 or $100, it's 10 pips. So that if you are in a situation where you're trading that $10 account, or the $10 pip account, and then all of a sudden, and you lose once, and then you trade 10 lots and you lose $100, you've lost another 10 pips, and let's say your limit is 20 pips for the day, you're done. The fact that you changed your dollar value doesn't really make any difference, because it's the pips that you need to learn to discipline yourself with. Don't set your limits on a dollar value. Some people go in and they say, well, when I lose $500, I'm done. Or when I lose $2,000, I'm done. You might be able to do that playing craps, but you can't do that in currencies. It has to be based on a pip value. And your trading should be that you're not hopping around be trading, oh, I'm going to make this trade with 10 with one full lot. Oh, I'm going to do 3 lots on this one. I'm going to do 5 on this one. I'm going to go back to 3 minis on this one. You're all over the place. Either you know how to trade and you're willing to trade the bank, or you're not. I mean, why have $50,000 in your account if you're going to trade 10,000 of it? You make money by risk management, and to risk manage such a small part of your account, unless you're scalping, doesn't make any sense at all. You have to put your money to work for you, so that over the long term you're able to make outstanding profits. But when you're losing, you have to have some kind of a ratchet, some kind of a thing to shut it down. Because if you're in there day trading and you lose 2 or 3 times, and you say, well, I got this figured out. I'm waiting for this breakthrough to happen, and it keeps coming back on me. So next time it breaks, I'll be okay, and it isn't, and you lose, and okay, well, I'll try something different, and you're 40 pips down for the day, 50 pips down for the day, and you're going to take that next trade? It just doesn't make any sense. So set yourself a daily pip level that when you've lost that number of pips, you're done. And you can't say, well, I lost 20 pips and my limit is 30, but now I've made 20 pips, and so now I'm at break even. No, you're not at break even. You don't want to have your losing pips exceed your daily quota, regardless of how much money you're making. Because if you made a lot of money, take your profits and sit out the next day. I mean, if you make 1% on your money, on your risk during the day, what are you looking to do? Make 4% on it? What do you think the reasonableness of that is? You can't go to the bank today and put your money on deposit in a savings account and even make 1% a year. So you make 1% a day or 0.5% a day, that's good money. 0.5% a day, figure it out. I mean, it adds up to a lot of money. So shut it down immediately on a pip value, and you should be fine. You come back the next day and you start over again. So what if you go out 3 or 4 days in a row and you shut it down early? Count those number of pips up, and then count up the numbers of pips that you would have lost if you would have kept banging away at it over the course of that 3 days. The course of that 3 days could have been a couple of hundred pips. This is not worth it. So 2 ways to manage Forex drawdowns. Number 1, embrace your loss. And you do that via the confidence that you have in your trading metrics that the losses are really just part of the game and that the winners will be more winners and higher dollar value wins than the losses. And then secondly, you shut it down immediately and base that on some kind of pip value as opposed to a dollar value. I think things will work out for you. Maybe you got other ideas that can work involved in that, but those are 2 of the simplest base ways. So if you're getting started in your trading, use that. Because if you were really good and you were making money, that you wouldn't need a rule like this. You'd have your own rule already in place. So if you're struggling a little bit or you're just getting started with this stuff, make yourself easy rules that you can close the platform down at the end of the day and go to bed and say, hey, I lost 20 pips or 50 pips or whatever it was, and tomorrow I'll hit it again. I'm flat, and I shut it off. I had discipline, and I lost, and I'll embrace those losses because I know tomorrow will be better because I've got good trading metrics. That's the way you have to feel about your trading, because if you don't, you're going to lose. And death by 1,000 cuts is still death. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.